Welcome, everyone. I'm Angelo Robles to the Angelo Robles Podcast. I'm also the founder and CEO at Family Office Association. I look to distill the best practices and best ideas of among the world's most successful investors, families, and their family offices. I hope to provide thought-provoking opinions and feature amazing thought leaders to our listeners and viewers of the podcast with an eye towards the future of successful investing, families, and family offices. Today, we're very fortunate to have Robert Breedlove. I've been a fan since I became familiar with Robert about 2 months ago and immersed myself in Bitcoin and digital assets and everything within that community, and really exciting to have him on. What are we going to be talking about? Like everything, but if I had to give it a title, how about what is money, the past and future of money, and self-sovereignty? Robert, welcome to the show.
Thank you, Angelo. Glad to be here.
My pleasure. So why don't we get right to it? What is money?
Well, that seemingly innocuous and simple question is actually an inexhaustible source of answers. So the classic Austrian economist would tell you very simply that money is the universal medium of exchange. Well, what this means in an economy is that the gist of it is mankind is more than the sum of his parts when he trades, right? So this is what Adam Smith referred to as the division of labor. So if each of us focuses on a specialized craft, and we can produce a thing more productively than others and trade that thing with others, then collectively we can produce more output, right? That's what productivity is, and that's what the division of labor does. And that's what society, by the way, is designed to protect, to preserve our rights to life, liberty, and property such that we can trade without facing the threat of violence or theft. So in any trading economy or any society, the most tradable asset or the most liquid asset is by definition money. So historically, money's taken many different forms, right? It's just a concept that sort of inhabits a different good or service based on the technological realities of the society. So the first principles of money, the properties that this good or service needs to embody to be successful in the marketplace are divisibility, durability, recognizability, portability, and scarcity. Now I'm going to gloss over a lot of history, but money's taken a lot of different forms. It's been cattle, it's been salt, it's been glass beads, and ultimately the world settled on gold as money. As we all know that pretty much intuitively today, gold's been money for about 5,000 years. And the reason for that is that of the monetary metals best satisfied the first four properties of money, the most visible, durable, recognizable, portable. Of the monetary metals, gold was the most scarce, which is quantified by either its stock to flow ratio or which is just the inverse of the inflation rate. So another way of saying that is that the gold supply was the most resistant to inflation of the monetary metals, which were themselves the best monetary technology historically. So, and the inflation resistance means that gold, you could reliably depend on gold supply to only increase, say, at 2% per year, year over year. So when I choose to park my wealth in gold as a store of value that's holding monetary premium for me, I select that, and market participants naturally selected this over time because it had the lowest and most reliable inflation rate, which made it the best store of value. And so this meant gold was the best tool we had historically for moving value across time. And this gets us to another definition of money, very simple definition of money, is money is just a tool for moving value across space and time. We're all trying to trade and exchange value with one another. Value is a very tricky concept, but you can think of it mostly as relevance to goal-directed action. So if you need to accomplish a goal, anything that accelerates you towards that goal is valuable to you, but it's unique to each person in different times and different places. So gold is great for moving value across time, but not so good at moving value across space, because gold has physicality. It's very heavy. It's expensive to secure. Logistics to move it are complicated and expensive. So what did we do? We started warehousing gold with custodians that would issue paper receipts. These paper receipts were as good as gold. They're warehouse certificates that could be redeemed for gold at any time. And what this did was augment gold's transactability across space, because now we can move this paper much easily across space than we could the physical gold. And later, when we abstracted these paper currencies into electronic form, gold gained even greater portability across space. So we were trying to optimize for this function of money, this definition of money, of moving value across space and time. And that's what a gold-backed currency was really good at. Problem with that, as we all know, is now we have to put our faith in the custodian, right? We need to always have full faith and belief that for every $1 in circulation, there's $1 on reserve that can be redeemed for gold at any time. And that is the trust that has been abused and broken throughout history, time and time again. Always presaging the collapse of every society is the debasement of the currency, is the breaking down of this trust. The most recent example of this is the 1971 Nixon shock, where we were taken off of the gold standard. And today we're 50 years deep into this global fiat currency experiment of completely unmoored and untethered money. And we've seen, a lot of adverse effects. Global debt to GDP has exploded. Things you wouldn't actually typically relate to money. There's been a lot of socioeconomic consequences as well. Suicide rates are up, obesity rates are up. There's a great website on this topic, WTFhappened1971.com. It goes through a whole gamut of data showing different socioeconomic consequences of us going off of the gold standard. So moral of the story is gold was great for moving value across time, not space. Paper-backed gold or gold-backed currencies were great for moving value across space, but they introduced an attack vector for issuers that they abused. So they abused its store value function by compromising its scarcity. And now we have a money that doesn't hold its value across time at all, which is fiat currency. So people are feverishly investing. All investors worldwide are forced to feverishly and maniacally invest just to try and outpace inflation. Whereas money historically is supposed to be this tool that we can hold our value in a trust minimized, risk minimized medium. And it's been robbed from the market.
So, that goes back to, I guess, the Medici family in Italy created the banking system as we know it in the 1400s, double entry accounting for ledgering. And that system that you noted, you turn in your gold, we have a form of a note or currency, and that stayed pretty, I guess it really hasn't changed much. What it had heading into the relatively recent past, pre-71, was at least gold backing it up. And then that was completely removed. Why don't we move a little bit to October of 2008, when the world, or some of the world, became familiar with whether a him or her or a group, Satoshi Nakamoto, and the invention of blockchain and Bitcoin, because truly, probably since the Medicis, that was probably the most revolutionary occurrence in the change of ledgering and, let's go with the word, money. Talk a little bit about that.
Yeah, that's a great historical framing. So we can look at actually double entry bookkeeping as one of the greatest inventions of history, right? It's something that enabled us to coordinate human action and the results of human action across space and time in a way that not many other inventions have. We could say maybe it's in the same category as like the calendar, right? With something that really helps us all, it's a protocol, something that helps us all speak the same language and adopt common and coordinated patterns of behavior across time and space. So, and through that lens, we can actually look at the invention of Bitcoin as another fundamental bookkeeping breakthrough. We've moved from double entry bookkeeping that consists of just debits and credits, maintaining a balance of assets and liabilities, revenues and expenses. And we're moving to a time anchored bookkeeping system. So it's triple entry bookkeeping. So you essentially have debits, credits, but you also have an immutable timestamp. And in Bitcoin world, we would call this block time, right? Whatever the block time or the block, some people call it block height, that actually, you can think of Bitcoin this way, is it's actually functioning as a clock. It's a clock that no one can argue with. Whatever the current block is, or the most recently sealed block, that is an immutable timekeeping instrument. And Satoshi, for instance, to prove the sequence of the Genesis block, which was the first block issued on the Bitcoin blockchain, he actually put a news article in there that pointed towards the purpose of Bitcoin, which was that I think it was the UK Chancellor was on the cusp of the second bailout for banks. And in his white paper, he detailed all of the trust issues related to currency, that you have to trust the issuer, not the debase. You have to trust the banks to custody correctly, et cetera, et cetera. So the entire premise of Bitcoin's, what's come to be called blockchain, which Satoshi actually referred to in the white paper as a time chain. So that's the actual correct term, is a time chain. It is an instrument for minimizing the trust necessary in the monetary system. And that, again, it's sort of, if we look back at what gold was, it's optimizing a function that gold marginally provided, right? Because no one can increase the supply of gold worldwide. If you're putting your wealth in gold, then it's trust minimized in the sense that no one can deauthorize gold, no one can decree that it doesn't have value, no one can artificially inflate its supply to steal value. So gold was historically trust minimized money. And Satoshi, it's another way to think about this is he took the economic properties of gold and he combined them with the internet, right? He built them into the internet, an internet protocol, which is essentially what Bitcoin is. It's an internet protocol infused with the economic properties of gold, but optimized. And he eliminated more or less, or dramatically minimized the need to trust anyone. Today in Bitcoin, when you send it to someone, when you send Bitcoin from address A to address B, it is as if you have flipped them a gold coin, right? There is no one in the world that can debase that transaction in any more than a predictable way that a gold miner can. It's a 2% per year. No one can reverse that transaction. No one can deauthorize it. It's a physical cash settlement essentially, but it's done digitally. It's done remotely. So that's another point he points to in the white paper, is that you can think of it as a base metal with no commodity use, no industrial use whatsoever, but with one magical property, that it can be teleported. It can be sent over telecommunications networks. So we can settle with finality now anywhere in the world near instantly. And that is just a total game changer for the entire structure of the existing financial system, which is premised on the inability of gold to be settled with finality instantly, right? We can't audit gold's total supply. It's very expensive and difficult to settle with it. You got to pack it on a ship, you got to hire armed guards, you got to ship it across the ocean. And Bitcoin is just something fundamentally different. And it removes the need for a lot of the institutional layers that we've built up throughout history.
And you mentioned it, I'll say it's slightly differently decentralized, and it's limited in supply, potentially upwards about 104 more years out to a complete amount of 21 million, unlike governments and fiat currency that will keep on printing away. You have one of my favorite definitions. I used it, and of course gave you credit in my white paper that I recently wrote about the subject for family offices. I'm going to read it, but now I would love to hear your context behind it. Bitcoin is a non-counterparty insurance policy on the legacy technology of central banking. This policy becomes more valuable the more fiat currency is produced, a true barometer for the failure of the legacy of the fiat system.
Yeah, that is my 30-second elevator pitch on Bitcoin.
It's probably my favorite one. Kudos to you.
Thank you. So we have this central bank system that is premised on, it's a leverage-based system. So it requires steadily more debt and more currency issuance to remain sustainable over time. And if you just look at US M2, for instance, since 1980, the chart is parabolic. So every time there's an economic shock, the Keynesian response, or the central bank response to the system, would be inject more liquidity, right? But it's very important here to understand that when we're injecting liquidity into an economy, we're not infusing it with any new productive factors, right? There's no new human time, no new ingenuity, no new factories, no new plants, no new equipment being added to the economy when we quote unquote print money. All we are actually doing is reallocating the claims on those productive assets from those using the money as a store of value to those receiving the newly printed money first. So it is just a mechanism for reallocating wealth away from mostly the most economically vulnerable among us. So typically the poor, people living on fixed income, pensioners, the people that depend on the store of value function of fiat currency are being stolen from, and those holding assets or being able to deploy the newly printed money first are receiving value stolen from them, from the bottom. So it's reallocating wealth from the bottom to the top. And that's why I've argued in some of my other work that fiat currency is essentially a pyramid scheme. It's exactly what it's designed to do. Now, this system clearly is not sustainable over time. And a quick study of history will prove to you, this is not my own opinion, this is the intrinsic nature of fiat currency, is that it is self-annihilating over time, right? It is debased over time to continuously add more leverage into the system until there's a debt jubilee or a hyperinflation event or an implicit or explicit default of some kind that causes the whole thing to collapse, reset, and start over. That is the cycle associated with fiat currency over time. So Bitcoin, standing in contradistinction to that, so we have a money of zero scarcity, right? Again, that very important property of money that gold exhibited best, that made it money. Fiat currency has essentially no scarcity. There's no limits. There's no bounds to how much fiat currency we can produce. The central bank can arbitrarily put as many zeros in that database as they need to satisfy their shareholders or any other stakeholder interest. So over time, we have this pyramid scheme just ballooning in terms of dollar nominal value. And standing in contradistinction to that, we have Bitcoin, which is it is firmly fixed at 21 million, which, by the way, that's the only thing Bitcoin optimizes for. Like every trade-off the system makes, you hear people complain about Bitcoin, it's slow, it takes a lot of energy, et cetera, et cetera. All of these trade-offs are consciously made, were consciously decided by Satoshi and consciously made by network participants to optimize for 21 million. All we're doing in this whole thing is optimizing for a money that suffers zero unexpected inflation, suffers 0% debasement over time. That absorbs this absolutely scarce money, which, by the way, as I argued in other writing, is Bitcoin it's an invention, but it is the discovery of absolute scarcity, because we've never had an asset that could exhibit absolute scarcity in physical reality, right? We could never say that the supply of gold will only be 100 million tons forever. You can't do that because people can mine more, they can create more, et cetera, et cetera. But in the digital landscape, with an algorithmically enforced money supply, we have the first instance of an asset that has a supply that's universally transparent and defined at 21 million. It cannot change over time. So as this system, central bank system, expands in nominal value, value tends to flow to scarce assets, right? That's why typically we invest in real estate or equities or even corporate bonds or government bonds as a means for sheltering ourselves from inflation. But what Bitcoin is the first pure monetary technology exhibiting absolute scarcity that's put right into that bucket with inflation hedge assets, if you will. And the punchline here, and the great promise of Bitcoin, is that today it is the ultimate risk-on asset in a portfolio, right? It's got upwards of 70 vol. It's something the market has never seen. It's this discovery of absolute scarcity, digital gold, 12 years old, a lot for the market to digest, to say the least. Fastest growing asset in history. But many perceive it as just a super risky speculative play. But the reason it is the fastest growing asset in history is because it's competing to be the ultimate risk-off asset in your portfolio. We're talking about a technology that is disruptive to gold. The money that's been with us for 5,000 years that central banks still hoard and accumulate today as they externalize the inflationary cost of their monetary policies onto society, they're hoarding gold. There's a digital upstart competitor disruptive to gold. So that's why it's an insurance policy. Sorry, long-winded answer to your question, but this thing we know collapses. Fiat currency collapses time and time again. People need to move into a money to survive during these hyperinflation or default events. We see, like if you look at Zimbabwe, people would dollarize, right? They try to get out of the Zimbabwe dollar into the dollar because the US dollar had relative supply scarcity and stability over time. The expectation would be that as we see other fiat currencies collapse, people are going to look to move into Bitcoin instead. It's the ultimate assurance of supply scarcity and monetary network stability the world has ever had.
My next question would be the majority of the single family offices I talk to, and it's starting to change, that have an allocation to Bitcoin is very, very low. It's in the single digits. Now it's getting attention. And again, those numbers are going up. And my question to you is going to be for them to form a thesis. For instance, I've interviewed billionaires on stage in banking and real estate. And my knowledge of Bitcoin was basic back then. And I looked at them, what do you think of Bitcoin? And they poo-pooed it. Not because they did research and formed a thesis. I would understand that. Angelo, I'm concerned about, China nationalizing miners. I'm concerned about taxes. I'm concerned about the government. I'm concerned about quantum. Now, we would counteract that, but that would be fair. I would understand that. But they're giving it no time at all. They just don't understand it. So I've gotten in trouble when I say this, but part of it is an age thing, and I'm a little on the older side. The statistics pointed out 3% of baby boomers have Bitcoin and something like, 32, 33% of millennials. What would you recommend for someone to research? Would it start with Satoshi's paper? What else could they include that would not take 100 hours, 10 or 20 hours to form an initial summary thesis?
First, I would say that this is very normal, by the way. When people first encounter Bitcoin, it sounds like hocus pocus magic internet money. And I would say when your understanding is at a distance from Bitcoin, you tend to be very bearish. I mean, I myself, when I first encountered it and heard about it, I was like, and I knew a lot about central banking. I knew a lot about the problems that it caused. I still didn't understand Bitcoin at first glance. There is a commitment of time and energy necessary in studying money from first principles and then looking at Bitcoin through that lens to comprehend its significance. So I would say this, shamelessly plug here, I actually just launched a YouTube channel and a podcast by that very name. So it's called the What is Money Show. Because in my experience of talking to high net worth individuals, family offices, institutions, you simply cannot compress the hundreds of hours you've spent studying Austrian economics, game theory, thermodynamics, computer science. Like this, you have to have this multidisciplinary lens to really understand Bitcoin. You cannot compress all of that into a few hours and deliver it to someone's ear with words. They need to actually adopt the beginner's mind and go on their own journey, their own exploration. There's a ton of resources out there, a ton of writing. But that is why I named the show that, because I wanted to instead plant that seed. If you just ask yourself the question, genuinely, what is money? And you keep asking yourself that question and you keep studying, I promise you it will unearth new answers for you continuously. I've been doing it myself for 5 years now. I still find new answers to the question. You think you're just going to get to the bottom of it and figure out what is money, but it's interesting. So just keep asking yourself the question. So shameless plug here. I actually just recorded for the high net worth individuals, billionaires, et cetera, in the office. I recorded 10 and a half hours with Michael Saylor, who just bought, I think they invested just over 1.3 billion total in Bitcoin in 2020. And his holdings are now above 2 billion with Bitcoin's price action this year. And this is between both his personal holdings and his company treasury, which they announced. His company's MicroStrategy. It's a NASDAQ listed business intelligence firm. They made Bitcoin their primary treasury reserve asset. So all of their savings, essentially across all business operations, are being swept into Bitcoin periodically. Saylor's a brilliant guy. He's a deep thinker. He understands technology very deeply. He understands digital scarcity. Actually, he made a fortune buying and selling domain names in the past. So he's a guy that was predisposed to understand Bitcoin. And it took him until the year 2020 to really see the light. So don't beat yourself up. There's another side of Bitcoin denialism where, like, you may have heard about it in 2015, you didn't buy any, so now you're a little salty and you think you missed the train. Like, don't let that stop you from asking yourself this question, what is money, and learning, because this thing has a long ways to go. So Saylor and I recorded 10 and a half hours. We approached money and technology from first principles. This is on my podcast and YouTube channel. I would say you could start there, actually. We start from Stone Age technology and build a sound intellectual foundation all the way into modern software, modern technology, and Bitcoin, and how Bitcoin fits into the picture. The feedback we've been getting on it is tremendous. I think you can get, it's probably 14 hours total of listening, but I think that is kind of a soup to nuts place to invest your time and learn about it. And another way maybe to think about this is that everyone sees and understands the value of the internet today. I don't think there's anyone left in the world that would argue that the internet is a fad or a flash in the pan or a non-impactful technology. We understand it, right? But 25 years ago, when the internet was in its infancy, most smart people disregarded the internet. Like, why do I need a website? Who cares? It's, Paul Krugman's famous quote about it going the way of the fax machine. It takes time, I think, for the market to really digest the significance of innovations of this magnitude. And that's another way to really, again, to think about Bitcoin, is that the internet itself evolved in layers. So we had layers of these open source protocols interlinking with one another, and that is what we call the commercial internet today. So you may have heard of some of these, like HTTP, TCP/IP. This is multiple open source software layers for moving information across space and time without asking permission. That's what the internet is. Bitcoin is just the latest layer in the internet. It's a set of open source protocols for moving value across space and time built right on top of the internet. So it's like owning equity in HTTP or something. If you could imagine owning a little slice of every business that's built on the HTTP protocol, right? All of a little slice of all the value of all the transactions and all the cash flows that businesses using HTTP generate today. That's what owning Bitcoin is. It's the internet of money, the internet of value.
And I suppose, Robert, another question I would ask you, and I know it sounds like a basic question, but this would be one of the two most common questions I get from billionaires that reach out to me. One, it starts with, okay, I do the research and I'd highly recommend anything with Breedlove and Saylor together for like 14 hours. It's a no-brainer. So it definitely gets my stamp of approval. As soon as I'm finished tonight, I'm going to begin my first 2 hours. So they form a thesis. They're ready to move forward. It's like, Angelo, where do I start? So for me, and you're going to disagree, but I tell them the easiest, and I've done all of it, is probably Cash App on Square, followed very closely by PayPal and what they're doing. And it's incredibly convenient. It does have some drawbacks. Then I guess I would move on to a US regulated KYC exchange, Coinbase, Kraken, there's others. And then that leads to the next question. Okay, I put whatever, 1,000, 5,000, 10,000 just to get comfortable with the process. Oh, but now it gets complicated with how do I store it? Do I do a hot wallet? Do I just leave it in the exchange? That's probably the easiest. Hardware, but suppose I get hacked. And if I buy large amounts, do I trust a quote unquote professional custodian? We could go hours about this subject. There's more exciting things I want to talk about. But if you had to give it a couple of minutes, I think the families would like to listen to it.
Yeah, sure. So I would recommend, actually, for the really high net worth guys and stuff, I do recommend that first. You should always educate yourself first, but really just go out and buy a little bit, because once you get just a little bit, your mind will naturally go towards the price. You're going to want to study it more. As I say, where your money goes, your mind follows. So just get a little bit and start studying it. That's a great strategy. Actually, I advise a couple of companies. One, it's called Swan Bitcoin for US customers.
Oh, sure. Yeah, they're great.
They're great. They enable automatic recurring purchases, automatic withdrawal into cold storage or self-custody, and they do it at the lowest fees in the business. So they're actually, I would recommend them over Coinbase. Coinbase charges higher fees. They sell you a bunch of shit coins. It's very confusing. Swan's a much more simplistic app. There's another company I advise called Unchained. That's Unchained Capital. They provide a lot of Bitcoin native financial services. So they do multi-signature custody, which is really interesting. You can take your key and chop it into 3 pieces, give one to 2 different custodians and hold one yourself, hold 2, give one, whatever. You can do all these unique arrangements. And you can this is another unique quality of Bitcoin, is that we can have custody without counterparty risk, which is really interesting. You don't need to trust just Fidelity or just Goldman anymore. You can actually chop your key into as many pieces as you want and give it to multiple custodians. So that's a radical new innovation in Bitcoin custody. And they also provide like Bitcoin-backed lending and other financial services. So those are 2 really easy ways to buy and custody your Bitcoin, Swan and Unchained Capital.
I mentioned to you that I listen to your podcast from Stephen Livera, who does a great job. You effectively did a debate with Jesse Lawler, who's very intellectual and, again, made some interesting points. I suggest people go and listen to that podcast as well. But I'd like to transition our discussion, and it's going to sound like it's getting a little off topic. It's not. If anything, it's getting more on topic to the bigger picture. So I would like to ask you, from a governmental perspective and big government, a nation state, what does that mean to you? And how is that impactful to really everything that you discussed? Modern monetary policy, gold, now it's a fiat currency, and the whole issue of taxation and government control over its citizens.
Yeah, this is a heck of a topic. I'd like to first point out this book. It's called The Sovereign Individual.
I have it in my phone.
This was what that debate was about, actually. The thesis of this book, which was, first of all, written in 1997, and it has accurately predicted the rise of social media. It also predicted the rise of anonymous cyber cash, which is something like we would call Bitcoin. And they also predicted some other scenarios that we haven't. No, they predicted a global pandemic. They predicted this thing being an issue that we're going through today. So it's been a very prescient book, to say the least. The thesis of this book is that encryption and software would be disruptive to the nation state. So this is kind of an extension of the Andreessen Horowitz thesis that software is eating the world. Well, it's not just eating private business. It's also going to eat public business, public organizational models like the nation state. And one of the big drivers in this movement is digital cash, what we would call Bitcoin. So today, the government itself, and this is not just the US government, governments around the world, they depend on an inflatable currency to paper over losses. So they can run these bureaucratic organizations that are not accountable to a P&L. Like in a private business, you raise capital, you generate losses long enough, your shareholders are not going to keep putting money into a black hole, you go out of business, right? The market reallocates the capital, the world moves on. In a government organization, we can keep dumping capital into these black holes where the bureaucracy is not satisfying any want or any want of market participants. Yet they can continue to remain sustainable and functional because they have a perpetual mechanism for wealth extraction through both taxation and inflation. And the thesis of this book is that as tools developed where people could move their capital into, again, we'll call it digital cash or Bitcoin, you could think of this as being the ultimate offshore banking. You can think of Bitcoin even as the ultimate offshore bank. It's a place you can park your capital that no one can confiscate when it was properly custodied. No one can inflate. No one can even know that you have it, by the way, if you custody it properly. And it will force, by inducing people to adopt this place of storing their wealth that's resistant to inflation, it will actually force governments to become more competitive over time. So they will become more accountable to their P&L, which means they'll have to listen to the preferences of citizens and serve the preferences of citizens more like a private business over time. And the simple example here would be, think of your customer experience at the DMV versus your customer experience at Amazon, right? The DMV would be the monopoly, right? They don't care what you think or how long you have to wait in line or how many forms you have to fill out. Whereas Amazon is a free market competitor. They are, that's Bezos' thing. He left an empty chair in all of his board meetings to ask the customer what they thought as they're kicking around ideas. They're very dialed into the preferences of the customer. And that's what a free market capitalistic society does. So, and the numbers are staggering, by the way, just to barely touch on them here. If you consider that reducing your exposure to taxation or inflation at even $10,000 per year, if you could instead invest that annual tax payment or amount lost via inflation, you could call it a negative real yield. If it was $10,000 per year over 40 years of earnings, and you invest that into a vehicle that generates a 10% annual yield, that's a $4.4 million decision. Right, and that's just for a $10,000 tax bill. If you increase that to 100,000, it gets into the tens and hundreds of millions very quickly. So as people, the other thesis in this book is as market participants wake up to this power of compound interest and how much they are being financially gutted through inflation and direct taxation, non-consensual taxation, by the way. Like today, none of us get to negotiate our tax rate. We just get told what it is. The thesis of the book is that digital technology will force governments to be more competitive. It will allow market participants to be able to negotiate prices with governments, right? To negotiate individual tax treaties, which some high net worth individuals do today with small countries.
Like the cantons in Switzerland, Singapore, and some other locations.
Yes, exactly. So we'll see the long run consequences of this are the relocalization of government. Government started out as just a localized affair. Right? They just preserved the peace essentially so trade could flourish and we could generate wealth. But through the mechanism of fiat currency, we've been able to centralize power and wealth into the hands of a few that govern, in the US, we have the federal government overseeing 330 million people and monetary policy at the Fed overseeing it for 4 billion people, probably? How many dollar users are there worldwide? It's more than half the population of the world.
Of course.
So it's very centralized. Extremely centralized, with the pendulum has swung so far in this direction of centralization that it's caused a lot of consequences in the world, which I would argue a lot of what we're seeing in 2020 is a direct consequence of. And Bitcoin and other distributed encryption technologies decentralize power again. they restore sovereignty to the individual. And the book is very interesting. It paints the picture of how the logic and economics of violence over time, when the returns to violence are increasing, power tends to centralize. And then when the returns to violence decrease, power tends to decentralize. And encryption dramatically reduces the returns to violence because you can't confiscate wealth from people. You can hide it in a place that can't be physically coerced, essentially. And the analogy here, sorry, one last thing. The analogy here is the high seas. So there's a reason we have international waters worldwide. And it's because it's impossible to project jurisdictional dominion over the ocean, right? It's just not economically feasible to police the ocean well, such that we have like the American Ocean or the Chinese Ocean. It's just a constant contentious battleground, if you will. The authors analogize the high seas to digital space, right? It's a realm in which jurisdictions cannot project their dominion. You cannot project and enforce law behind a wall of encrypted energy. It's a digital high seas, if you will, that will be a domain of pure capitalism going into the 21st century.
So you mentioned like non-consensual taxation. We may circle back to that in a second, but from what you're saying, governments destroy purchasing power through inflation. Mm-hmm. Now, again, we could do a multi-hour discussion about the concepts of this, but maybe in tying that together. So what do you mean by that? And, there's different rules of thumb. So if you go by just what the government says, CPI, we really haven't had hardcore inflation since the 70s. Although I would argue and agree with what Michael Saylor says. It's completely individual. If you're an ultra high net worth individual and you live in New York City, the Hamptons, Malibu, you're buying art, you're getting top quality medical care, your kids are going to Ivy League schools, all of that, your true inflation in today's economy, I bet you it's like 8 to 12%, if not more.
Yep, absolutely. So we're back to first principles, actually. Inflation is a product of what you value, right? You're creating value in the world to earn money or create wealth for yourself. And then you want to then take that wealth and value and go acquire things, goods or services that you want. The inflation rate for every individual at every different point in time and at every different place is different based on that basket of things they are trying to obtain, right? As Saylor, one of the examples he uses is the US Treasury, which is early retirement. If it's yielding 500 basis points on a $10 million treasury, then you're talking about something that yields $500,000 a year. Say that's enough for early retirement. But if all of a sudden that treasury collapses to 50 basis points, then you need $100 million worth of that asset to have early retirement. So the inflation rate, which has been, this year treasuries have drastically outperformed when there was the flight to safety in March and throughout the year. So you can think of inflation. Here's another way to think. Here's a unique way to think about it. So, and this is why it's hard, I think, to comprehend, is because money is the lens through which we perceive economic value, through which we perceive human action and its consequences in the world. So it's kind of like it's like trying to analyze your own lens through your eye. So the sun is 100 million miles away from the Earth, roughly. It's like 93 million miles. Call it 100 million miles. If we arbitrarily decide today, we pass a law that says we're going to inflate the definition of the mile to match the definition of a kilometer, right? Just overnight, we'll just inflate it. Kilometer is about 60% the length of a mile. We would now convert the distance from the Earth to the sun from 100 million miles to, say, 170 million kilometer dash miles. So we've inflated the distance, right? Have we changed the distance though? Have we changed anything in reality? Or have we just changed the measurement? That's what inflation is, right? We think real estate's going up every year. Equities are going up every year. The value of my home is going up every year. But this is just a depreciation of the nominal, or it's an increase in the nominal value based on a depreciation in the currency. The currency is the lens through which we're looking at economic reality. And it's amazing that this illusion has been perpetrated for so long. I think there's a great book called Honest Money by Gary North. And he's looking at money and banking through first principles. It's free on Mises.org. It's through a Christian perspective, but it's a really interesting book. And he argues that all of this is rooted in humanity's proclivity to try to get something for nothing, right? We all want something for nothing. I want to be able to put my wealth in a portfolio and watch it just grow. Central banks want to be able to just print money whenever they need. But what we're doing is trying to just deceive economic reality and deceive ourselves, frankly. We think the nominal value of something increasing means that its real value has grown. But what's actually happening is the faster we're inflating a currency, the more that value is just a paper gain and not a real gain. And that's what's destructive over time. So to your point there, if you check out Chapwood Index, is a website that actually lays out some of the real inflation rates for mega cities like you referred to. I think it might just be US based, but they might have some international ones as well. It's closer to 11, 12, 14% for most of the major cities. And the CPI, which is just totally asinine, because again, you can't have a universal metric for inflation. It's unique to everyone all the time.
Completely. The CPI is even worse. So it's a universal metric, but they're also excluding quote unquote volatile assets. So energy, food, by definition, volatile, anything that changes in price. So anything that inflates in price, they exclude. So for the inflation metric relied on by Keynesian economists, it by definition excludes things that inflate in price. So it doesn't matter what you do. Like, it doesn't matter what happens in the real economy. They will always back into the calculation necessary to call it 2% or whatever their target is to achieve their goals. And it goes deeper too. It also doesn't take into account the quality of goods. So we don't just need to, producers can choose to keep the price constant, like of say blue jeans, right? They can keep the price constant even in an inflationary environment, but they can reduce the quality of inputs. So they can spend less money on what they're making it with. So there's another aspect of this called shrinkflation, where the quality of goods actually deteriorates, even if the price may not increase as much. Sometimes they happen at the same time. You got price going up and quality declining. So inflation is really bad. We can think of it as theft integrated directly into the intersubjective fabric of trust, which is money, right? Money, again, is meant to be trust minimized. We have theft incorporated directly into our money, and it's a big problem. So my next question always makes what we would call in the community, the maximalist, a little bit concerned, a little bit upset, and sometimes even mad at me for bringing it up, but I feel I have to. So when a government's tax base dies, the government's very threatened. The governments have the ultimate power, from confiscating your money through taxation, regulation laws, trumped up charges, I could argue, civil forfeiture. And this happens in the US. It doesn't have to be Venezuela, where obviously worse things happen there. My big question is going to be, you're not totally private per se as a US citizen. One, the IRS is going to follow you everywhere. Okay, you can move as a US citizen to Puerto Rico, get some advantages. We won't bore the audience with too much detail about that. But if you're buying on a KYC exchange, they're pretty sharp. No jokes. Certain people at the government and people they contract to. If they subpoena that exchange, what happens if you have it at a deep cold storage custodian and that custodian gets a subpoena and they're told to freeze your money? I always think at the end of the day, the governments, whether we like it or not, and it makes me frustrated as a wannabe libertarian, that it's not completely off the grid. We also have to report it on our tax return. What would you say to that?
Yeah, it is. I think they've added a line to the top of the individual tax return. Do you own any digital currency? So
Right.
it's very top of mind. The 2017 run definitely took it from being perceived as a joke to something being perceived as a real innovation or a real threat for government.
Mhm.
So I would say that this, to me, I think the best way to deal with this is my investment strategy for Bitcoin is to just accumulate steadily over time. So the advice I give to new entrants is that you should establish an initial and a target portfolio allocation percentage, right? So I want to be in at 5%, but I want to target 10% total of my portfolio in Bitcoin, whatever your number is based on risk appetite, goals, et cetera, et cetera. Market buy the initial position and then dollar cost average towards the target position. But this is on a cost basis standpoint. So I'm not saying when Bitcoin runs 3x and you hit your 10%, that you should then stop averaging. It should be on a cost basis perspective. Because, and that's my opinion. You could say when it hits 10% on fair market value, you're done. That's fine. I like to press the winners, right? So I don't want to reduce exposure because a winner is outperforming. So I like to look at it on a cost basis standpoint. So then you're dollar cost averaging from initial position towards target position. And then opportunistically, you're going to buy price dips because again, that's letting you take advantage of the volatility. Bitcoin has drawdowns of up to 30%, even in bull markets. You can increase your position and decrease your cost basis by taking advantage of those. And ultimately, you want to self-custody. You can do this with these collaborative custody schemas I've laid out, or you can do it just in a general cold storage. But the point is that of Bitcoin, the power of Bitcoin is that you don't need to trust any intermediary whatsoever. So you can avoid issues like you're describing, where maybe your custodian's being subpoenaed or whatever. But in general, I think too that the hostile tax codes of the world, you already have a huge incentive to sort of buy and hold and accumulate and never sell. But that really brings home the strategy for me. It's like, you just want to accumulate Bitcoin and never sell it. Like, what's the point in ever paying capital gains on this thing? It's designed to be a binary bet. Either some black swan takes it out completely. And a black swan, by the way, by definition, is an unknown unknown. So when people ask me about that, like what could stop Bitcoin, et cetera, there's been a lot of thought behind that. Every Bitcoiner is a super adversarial, super intelligent thinker. They think about this all the time. It's a $500 billion question, frankly. If you could figure out how to take out Bitcoin, there's a huge honeypot out there. Short it and take it out. No one's figured it out. So you ultimately want to self-custody Bitcoin. You have to report it, right? We all need to comply with government regulations. But I think the way to protect yourself financially is to just accumulate via that strategy and never sell. If you ever need liquidity, you could consider borrowing against it, right? And this would need to be based on its trailing, say, 36-month volatility, 48-month volatility. It tends to run in 4-year cycles. And in terms of the agreement, how quickly is it marked to market, which typically is 24/7 because it's 24/7 liquid. So you need to be very careful using leverage. But if you're in a big position, you can treat it like premier real estate, right? If you want to block premier real estate in Manhattan, you're never going to sell that. You just hold it forever. You borrow against it a little bit as needed for liquidity, and you refinance every few years as it appreciates. You treat Bitcoin the same way. It's the first absolutely scarce monetary network in history. It's the only one there will ever be. So it's like, you can think about it like the ultimate land grab, if you will. You just want to accumulate more and more territory on the network over time and never sell. So that's how I think about it. I mean, it's, and the other side of the binary bet is Bitcoin eats, all the money in the world, or all the store value in the world. And at some point, these hostile tax codes, you'll just have a lot more optionality, right? You'll be able to negotiate better treatment in other jurisdictions over time versus this non-consensual terms of the deal that are imposed upon us today.
So, I mean, one thing positive I'll say, and please feel free to chime in relative to the US, there are for sure countries that are way worse than us, multiple in Europe. And today it came out that India, who has been terrible with Bitcoin, wants to charge what, like an 18% tax per transaction. A little bit of a benefit here in the US, an incoming US Senator, Senator Loomis in Wyoming, is an extreme advocate. She's really aligned with you, and she's going to be a force. And there's others in US politics for sure that own Bitcoin and crypto. You have significant investors getting involved. We all know about Druckenmiller, Tudor Jones, Cathie Wood. You have inevitably, good or bad, the development soon to be of an ETF and big institutions getting involved. You have JP Morgan and Goldman, what I believe over 100 people each in their digital assets division, exchanges, one going public. In other words, probably tens of thousands of people are employed in the US. They're usually rather intelligent and good income earners and pay their taxes. You have probably millions and millions of users, and politically at this stage, now that it's been 12 years in, and I didn't even mention, you would disagree as a maximalist, but the proposed treasury regulation, which has me concerned in some ways too, but try to look at it from an investor's perspective, this might actually be good. It's a little bit of a stamp of approval that the US government is looking to work along with it. You know, the fact that there's options in futures on the CME, there are some positives. We could debate them, but there are some positives to the US in Bitcoin and crypto compared to a lot of other countries that I know.
No, I agree. Look, I've argued about this in a lot of my writing, actually, is that if we look at America from a first principle standpoint, what is the idea of America? Why did we all come here and start this new country? And it was based on the tenets of free market capitalism, right? And religious freedom, things like we can believe whatever we want and separate church and state. And the three pillars of free market capitalism are private property rights, sound rule of law, so we can resolve our disputes over private property rights non-violently, and honest money. Right? And in the Constitution, states were actually authorized to issue their own gold or silver currency as needed. So it was designed to be, and we had, states instead of one centralized government. We had a lot of state autonomy versus a centralized government running things, which has changed over time. The nation state that is America today is a far cry from the idea upon which it was founded. But America was designed to be this decentralized sovereign body. And Bitcoin positively embodies these principles in money, right? We have a private property right in Bitcoin that is completely resistant to confiscation. It's another way to think about this is knowing and owning are now the same thing. Bitcoin is just pure information. So you can store that private key in your mind. People encode it into public articles, right? That only they know how to decipher. So it's in the public sphere, but it's encrypted. You can put it in a song, you can put it on paper, you can put it with a custodian, you can do all kinds of things with it. It's just gives you many degrees of freedom in how you custody it. All the disputes in Bitcoin are settled via a rule of law, right? So people can just vote with their feet, so to speak. You can fork Bitcoin and do different things. And then the net outcome of that is just the most honest money the world has ever had. And this also points back to inflation, by the way. Another way to think about inflation is a violation of private property rights. We're taking claims on productive assets from some and giving to others. So we're violating the private property rights of those that are being that are being victimized by inflation and giving to others. And Bitcoin just breaks that, right? So it's a re-implementation, if you will, of this pure American idea on what we were founded. And that's why Senator Loomis is a great addition to the American
For sure.
Here. She speaks about it eloquently and has the right idea. But to your point, more people that adopt this, more institutions that adopt it. We had Mass Mutual put whatever.
It was huge, 100 million plus.
Which was 4 basis points of their balance sheet, by the way.
Right.
Just staggering. $100 million, 4 basis points, I think. This vortex of incentives with Bitcoin at its center just start to reshape legislation, regulation, and individual opinion about it over time. And that's the really interesting thing about Bitcoin, is that you can't stop this game theory from playing out. This is a whole nother interview too. We can talk about it for hours, but I'll try to sum it up quickly and say that once you realize that this thing can't be stopped, it's just distributed software, it's everywhere and nowhere, there's not really any regulation that can change the network rules or protocol. You can't pass a law to make there be 25 million Bitcoin instead of 21, for instance, right? It exists beyond the reach of man. Then your final decision tends to be, I need to just hold some of this thing, even if nothing else, as an insurance policy against its ultimate success. Even if you are a central bank, if you're the Bank of International Settlements, the central bank of central banks, there will come a point, if there already hasn't come a point, that they decide this thing is an existential threat to their business model, and the only pragmatically responsible thing to do is to hold a little bit of the network in case it succeeds, right? Even if it's whatever, 50 bips of their balance sheet or something, in Bitcoin, in case Bitcoin succeeds, as a hedge against its success. So that's how Bitcoin bootstraps itself. It just keeps incentivizing people to operate on its behalf, right? We can think of human nature itself as a core component of the Bitcoin system, which is really interesting and hard to get your head around, but fascinating nonetheless. And to your point earlier, that's the dilemma governments face. You can try and take a strong-handed approach and be like, we're not going to allow any exchanges here, no custodianship, no Bitcoin business.
Then it goes to Canada.
That's right. This whole industry is digital, right? So if you try to clamp down in one physical jurisdiction, the capital mobility is near infinite, right? You can just move these businesses, and Bitcoin itself can just move near instantly, anywhere in the world. So you clamp down in the US, you've now increased the incentives for other jurisdictions to be more friendly so that they can get a piece of those tax revenues, a piece of that wave of innovation. And if you look at what the US did with the internet, there were similar talks of the internet early on.
Mm-hmm. That's true.
Disruptive to media, disruptive to government, et cetera, et cetera. The US government decided to take a do not harm approach. And what happened? We created some of the most valuable companies and fastest growing companies in the history of humanity, right? The FANG stocks and other big software business. So I think there's also that sort of benchmark in the minds of policymakers worldwide, is no one wants to miss the next big wave of digital innovation. And that's quickly becoming apparent that Bitcoin is that.
I, of course, want you to explain to the audience how they can learn more about you and reach you. I have one final question. I know we're very, very tight on time. Probably another hour discussion we could try to do in 2 or 3 minutes. Central bank digital currencies, programmable money. That is centralized, unlike Bitcoin. They can make more of it, unlike Bitcoin. And it allows it's beautiful in some ways, very efficient, could be intriguing for taxes. I hear you, but it is big time, big brother. They see everything you do, and it is kind of all controlling, but it does appear to be inevitable. Is it?
Yeah, I would like to I saw one question in the chat I'd like to answer. Someone asked, does this mean that TIPS fail to serve their purpose, referring to treasury, inflation protected treasuries? And my answer to that real quick would be yes, so long as they're premised on the CPI, if they're just clearing the CPI, that those, you can think of the real inflation rate, which is whatever yours is, as your own hurdle rate. So if it's higher than the CPI, which for almost everyone it is, a TIPS, inflation protected treasury, is not going to provide you sufficient return to offset inflation. So I think that was a great question and good point. To your question, CBDCs, they are inevitable, right? Central banks they've been pushing towards a cashless society for some time, to have a monetary network that they can singularly control and monitor and tax. for a long time, but Bitcoin, and I would say even 2020, has been an accelerant to that process. So I think China will get there first, right? We're probably even just a couple of years out, even maybe 2021, 2022, we'll see a digital yuan. They tend to be 5 to 10 years ahead of the rest of the world. So we'll see how the government's rolling it out behind them. However, I don't expect these to be wildly successful. And I'm back to how inept government tends to be in providing satisfaction, right? We still in the US, we still don't have an app to say yes, like Biden or Trump on a mobile app, right? We conduct our whole lives on mobile apps. We still don't have a mobile voting app, right? So something so simple, the government still has been unable to provide. Now you could argue that CBDCs, there's a lot heavier incentive to deliver that for citizens than there is a voting app, which I agree. But I don't expect this to be a wildly successful experiment. I think we do end up with a number of walled gardens where you have, say, digital dollars or digital yuan that you can spend in improved ways based on your social credit score, which is something China's rolling out. But you're also going to have always this free market, unwalled garden, the jungle, if you will, where you can move capital freely. And you'll always be able to get, and this, you could call this like white market and black market, if you will, but it's kind of a messy distinction because, again, I think all of these clear boundaries are dissolved in the digital age. You'll always be able to get capital from a quote unquote black market into a white market, but you probably won't be able to do the reverse very easily. It'll be very hard to get capital out of, say, a digital yuan walled garden. So I think the incentives still will point people towards holding as much of their wealth as they can in the jungle, if you will, versus in these walled gardens, and then just allocating wealth in as necessary to do business. But again, in the longer run, the revenues of government are simply declining. And as revenues decline, their ability to enforce and function over time also declines. So we're going to see, it's going to be a radical change. I think a lot of the functions we're accustomed of the state providing will fall more and more to free market competitors. So we're going to see like private security forces, a lot more private travel. It's a really interesting time. So again, I'd point people to that book, The Sovereign Individual. They compare this to the fall of feudalism in the 1500s. And by the way, it turns out every 500 years, humanity has one of these major shifts. No one really knows why, but we had the shift to the agricultural age, we had the shift to the industrial age, we had the shift out of the feudal age, and now we have the shift into the digital age. And these are all in roughly 500-year tick marks. So we'll see.
Well, Robert, this was great. I probably left about 20 questions on the table and about 4 or 5 more from our participants. We'll save that for sometime in 2021, a part 2. For those that would like to learn more again about your YouTube channel, your podcast, or if you have, I believe you have a vehicle, it might be a consulting vehicle, how could they learn more and reach out to you?
Yeah, so my name is Robert Breedlove. I'm the CEO of Parallax Digital. You can check out our website, parallaxdigital.io. That's Parallax digital.io. You can also find links to most of my work on my Twitter page. My Twitter handle is Breedlove22. So that's at BREEDLOVE22. Also just launched the YouTube channel and podcast. It's called the What is Money Show. There are links to that in my Twitter bio, or you can just search for it on YouTube. The website for the podcast, for just the audio version, is whatismoneypodcast.com.
Excellent. That's fantastic. It's been a pleasure to interview you, and always a good sign when I had so many more questions that we just didn't have enough time to get into. Everyone, I'm going to keep my close quick today. I'm Angelo Robles. I'm the host of the Angelo Robles Podcast. I'm the founder and CEO at Family Office Association, a global membership organization dedicated to family offices. Check out our website, familyofficeassociation.com. We're doing great during COVID. We're very active on content, on digital programming, mixing and matching families, a private peer network that we have. So members get a lot of benefits. It's all up on the website. You can't miss it. And if I had to pick one social media tonight, probably most active lately for me has been my YouTube platform. I got this real estate when YouTube first came out, so I got lucky, simply Family Office. So you could find us on YouTube at Family Office. Everyone have a great day. And Robert, it's been a pleasure. Enjoy the day in Bali. Thank you.
Thank you so much. Appreciate it.
Pleasure.